Good morning, everyone. In this episode, let's talk about one of the very popular topic about financial management. It is about reverse mortgage on the insurance policy, a plan that enables the retiring people to empower themselves by liquefying, activating their reserve in their life policy. Well, maybe you're in the retirement stage or you're planning to retire. Do you find yourself, your assets, your net worth really tied up that you do not have enough cash to spend the life with? Of course, you want to pass on the legacy to your younger generations, but how about using some of the money that you hard earned and then for your improving of your own life, your own living? Well, maybe you eat better, play better, go where you want to go with your partner, and then nothing to worry about. Have the cash beside you to spend whatever you want to spend with. Well, maybe you have already have some flats, some properties, real estate. You have stocks. Um, Maybe your stocks are earning money for you, and then you do not want to liquidate them. And you probably have a life policy, and you do not want to sell your assets for cash. But how can you live better without selling your assets and then to gain the cash that is already in your reserve, in your life net worth? Well, maybe you have already have a life protection policy, a life policy that has a cash value, that have a death benefits if you pass away. You may liquidate to surrender the policy for cash, but you do not want to do that because it's making a good compound growth for you if you keep your money there. Then you can consider this reversing it by the mortgage your policy with the bank and get 10 years, 15 years, 20 years, 25 years, and even lifelong cash, monthly cash for you to spend to support your life. And then maybe if you need, you can use that money, take a lump sum of that money to pay your insurance bill, to pay off your credit card debt, or to renovate your house to improve your living conditions. Or in case your property, your flat, has to go through a major renovation, you need to chip in a lot of money, then you use the money for your renovation improvement. And maybe you want to engage in an enduring power of attorney. So whenever you're sick, when you live on the bed, when you're insane, you are in ICU and you cannot make decisions on selling your property at the right price, selling the real estate, selling stocks at the right price, you can have you can appoint a power of attorney, your representative, to do all the um, wealth management decisions for you. And for some people who wants to plan for their burying funerals and where they want to put their ashes, or they want to have a tomb, and then you need the money, you can always take money from that mortgage on your life policy. But how do we do that? Well, first of all, you must have a life policy that carries cash value and death benefits. And the higher the value it is, and of course, the more annuity or cash you can get out of it on a monthly basis. But if you do not have a life policy that can give you that purpose, then it's not too late to create one for yourself. The AIA has just developed a product called the Serene Life, which is a whole life policy that is for this purpose, reverse mortgage purpose. Then if you are in the 75, you can have a payment period of 5 years. And if you are in the 70, you can have a 10 years payment period. And if you're younger, let's say 55 years old, you can have a 25 years of payment period. And then within the period you save. And then, of course, the money that you are saving will enjoy a reversory, that means an annual bonus, shares of the profits generated by the insurance company. Or you can have a terminal bonus where you liquidate your policy, surrender your policy, or you come to the death stage. You can take all the money out. And of course, you can take the money out at one time, but if you don't want to give the money to your beneficiary in one lump sum, and they may be too young to manage that, you can do by instructing the EIA, the insurance company, to pay no less than 2% of your insured amount to your designated beneficiaries until it is fully paid up. Then you can have a longer term plan to distribute your legacy. And then maybe you don't want to do that, and you want to enjoy more of your life, and you do not want to surrender your policy or give away all the money that you have so hard saved. They can do a reverse mortgage. Find a bank to do it. The reverse mortgage is a charge on your life policy. You use it as a collateral for the banks to lend you money, 10 years, 20 years, 25 years, and lifelong money. Let's take an example. If you are 38 years old and you're insured for a 125,000 US, then your premium is probably about $2,500. And you saved for 25 years. At your age of 65, you will have 162,000 in your policy, and that is 2 times 6 of your initial investment amount. So by the age of 85, when you all spend your MPF money and you have very little cash, then this with this policy, you already accumulated for yourself $259,000 US dollars. That's about 4.1 times of your initial investment. Let's say you started later at your age of 40 and you decided to do a 10 years payment period with an insured amount of 150,000 US, then your premium deal is about $6,540 a year for 10 years. Then at your age of 65, that means 25 years later, then you have $150,000 in your policy account. That's about 2.9 times of initial investment. So until your age of 85, that means after 45 years, the amounts grow into 232,000 US dollars. That's 3.5 times your original investment. But if you, and that is the policy what you can do a reverse mortgage on. And how do you do that? Well, you go to a designated bank right now with about 5 different banks who are willing to do reverse mortgage for you. And then depending on your amount, you can choose a fixed rate or floating rate mortgage. Or you can have a plan that you don't have to repay your mortgage bills. Um, there are three methods that you can repay by different interest rate. And of course, the fixed rate will give you more cash to disperse, and that is higher than a floating rate. And of course, you have a 6-month cool-off period. That means within 6 months, you can anyway cancel your commitment and then reverse back and get back your policy. Let's give you an example. Let's say you are 65 and you have a life policy that uh, with a death benefits of about 2 million Hong Kong dollars, and you want to mortgage the bank to get 20 years of annuity, monthly cash payment, and then probably you get $3,480 a month for 20 years. And if you want to have a lifelong withdrawal of that annuity fund, probably you get a little bit less, but it will be about $3,157 a month until the day you die. Well, is there a fee, administration fee, or any other interest that you have to pay? Oh, of course. Since it is a mortgage loan to you, the bank will charge you a mortgage interest rate, and that will depend on the amounts that you borrowed. And different banks may offer different rates, but it's a very is a collateralized loan, very secure loan for the bank, so the interest rate will not be very high. And then you have to pay the mortgage deed fee just like you are mortgaging a property with the bank. There will be a 1,000 administration fee charged by the mortgage corporation. And for it, it guarantees your borrowing, your life borrowing. So they will charge you a insurance premium at your first 30th, 25th, or 37th and 49th month. That means within the first 5 years, they will charge you 1% as the mortgage interest fee. And if you want to take out an enduring power of attorney, you have to find a lawyer and a doctor to do that for you, so that even when you are in hospital, in the ICU, insane, you cannot make decisions, you can sell your stocks at the best price, sell your flat, then you have this power of attorney to act for you with this enduring power of attorney. So what's so good about having a few more thousands a month? What can you do with it? Well, of course, you take it like a rental income for yourself, and then you do not have to surrender your policy. Your policy in the insurance company will still to grow. You will not suffer any loss from it. And the policy at that time may be growing about 5 to 6% per annum, while you have to pay the mortgage interest rate, which is much lower than that. Even if you included 1% insurance premium on your mortgage corporation's insurance fee. And then you can take the money out for lifelong uses. And then use it with your family to buy some gift for your grandchildren. And then looks like this is a wise thing, and there's no hurt, no damage to you for you to do this and to manage your fees. Now, to you as a smart financial manager who manage your own finance, insurance now no longer an emergency cash, is no long even long no longer that is a legacy that you must pass on your second generations. Um, it is not just for the death. It has a living benefit, so we can use it for your own good and for your good living, so that you have a much brighter, more cheerful, more enjoyable life. This is your hard-earned money, so why don't you use it for your own good? And then it revitalizes your wealth, the wealth that sits there, and then give you the power to use that insurance policy to, well, do whatever you want to do and realize your dreams. And of course, if you want to leverage on your life policy to increase the insurer amount, so if a bigger ticket size insurance policy, you don't have to pay all the money. The bank can help you. The bank can finance your insurance premium. Then you can, according to certain percentage, you can chip in a little part of the money and then raise the others part of the money from the bank. We call it insurance premium financing. And of course, I'm not going to talk about it in details right now. That will be the topic of my next episode. But what you are doing is to take advantage of the interest rate differential. We call the interest rate arbitrage. Well, on one hand, you are gaining a 5 to 6% on your insurance policy, while you have to pay for 1 or 2% for your mortgage, for your borrowings from the bank to raise the money to make up the jumbo life policy that you are creating for your own. So that will be my next topic. So hang on and then follow our channel, and you will be able to know more about it. So it's actually as a time for action. Please give me a call, 9123-4196, 9123-4196, to talk about your own situations, whether you have any policy that you can do a reverse mortgage, or you're planning to do a new one with the Serene Life with AIA. And if you want to, I can help you with a proposal to design your Serene Life package. What's the amount, how much premium, and if you do it within October, AIA is willing to give you a bonus, a credit, so that will reduce your premium rate. And then if you're considering a reverse mortgage and you already have a life policy, what you want to do, the reverse mortgage, also talk to me, ring me, so that I can help you to go through the transactions and help you to set up the schemes. My telephone number again is 9123-4196. I'm Augustine Chow. I've been in the financial service for over 40 years, and I'm faithful and diligent to help any customers and my customers to get what they want and to create the freedom in finance. And let me help you to protect your life and to leverage on your existing wealth to give you all the advantages you need from your financial resources. So remember to subscribe to my channel, AIA Chosen Rates, and you'll get more updates on financial plans and services development in Hong Kong. And see you next time. I remaining your helper, Augustine Chow.